Hello, Mark Sturdy here with another extract from our weekly research from 7 days ahead across world markets. And looking at the summary sheet, I was wondering what to talk about and noted that once again, there is no market in which all the technical structures are pushing in the same direction. An unusual situation, but that doesn't mean to say there aren't interesting things to watch and observe. In fact, quite the contrary. It's very much in such a situation that you have to look most closely at the charts, it seems to me. Take, for example, the Nikkei 225. Last week we pointed out what the S&P had to do to look interesting. But it's our contention that the Nikkei has long been interesting in the long term for this particular structure, and we've been bullish for quite a long time. It's the completion of a complex head and shoulders reversal, two heads, shoulder, 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 completed some while ago, and has, since the initial surge up through this neckline to 37.20, the market went sideways for a long time and then surged up again. If we look at the detail in the weekly chart, you'll see that the breakthrough from the high of 37.20 happened in 2023 and early in 2023. And then there was a sideways pullback, which found support twice at the 37.20 level, giving a good sharp bounce right up to the prior high. This is a situation in which case we can't anticipate too much, but were this to break through 33.950, that would be a tremendous moment of bull acceleration, I think, creating beneath the market another prior high support. This is a pivotal area and needs really close watching. Looking at the December future, you'll see that there's a well-established trading range between 31,000 and 33,710. In the December contract, last week it poked its nose above there and fell down. So it's a situation of dramatic excitement and potential that has to be closely watched. In the detail, we can see in the daily chart, the market has penetrated up all through all these successive highs, 1, 2, 3, 4, 5. It poked its nose once, this is on Friday, and then closed beneath. So it's a market driven by, in the short term, a double bottom that completed on the push up through 32,660. So there is potential from this pattern. The depth of this double bottom would suggest the market should go higher than the previous high of 33,710. But it is dithering and needs close attention. A close above 33.10 in the short term would lead to potentially a close in the weekly chart, and so on and so forth. One thing leading to another, in which case each time frame would click into coherence with the others, and might just if we look at the end of this week, if we have a close above that at the end of the week, might just snap into a bull situation in all time frames. Worth watching. Thanks very much.